Good afternoon everyone and welcome to another monthly analysis video, and today I'm going to be covering a crude oil forecast for February 2020 by running over the recent news events which has set the tone really for where this market is heading. We've had some really pivotal news this week to do with inventories, travel restrictions, new COVID variants and more. So what I'm going to do is break down each event and then tie them in with what is happening on the chart. Now oil is sitting at around $55 per barrel, but the price action is suggesting that a big move is on its way. So as we all know, oil price is mainly affected by factors influencing supply and demand. And let's begin with the supply news that we've had. And we had some really key news on Wednesday, and that was the crude oil inventories had dropped to 9.9 million for the week ending 22nd of January. Now this is a huge drop. Considering the forecast was just 430,000 barrels, the reaction on the chart should have been a huge increase in the price as supply has been cut significantly. Well, the reaction on the chart was muted, and it could be to do with the fact that gasoline inventories were up 2.5 million, but considering this drop in crude oil inventories was the largest decline since July 2020, there must have been some other reasons why price didn't react the way it should, and I think I may know the reason why. And it's to do with demand. And there are massive concerns at the moment about the demand to consume oil, and there are a few reasons why. First of all, around this time of year, China is normally responsible for what we call a seasonal boost in oil demand due to the Lunar New Year travel season. Well, the recent outbreak in COVID-19 cases out there is expected to put a huge dent in this and completely get rid of this seasonal boost that we normally have. And China is the world's largest oil consumer. So when there is an issue in China, it filters through to the rest of the world. Now, on top of this, there is just general market pessimism due to the new variants of COVID-19. We've seen huge drops in the stock market over the last couple of days. This is meaning more travel restrictions, with the most recent one coming from the UK. Now, Prime Minister Boris Johnson announced a clampdown on travellers from 22 high-risk countries that have reported new variants in COVID-19. One of them being South Africa, which has been in the news recently. Now, travelling from these countries you'll be required to quarantine for 10 days, and you're barred from leaving except for exceptional reasons. Now, this has just halted travel quite significantly. Given this video is a forecast for February, we know the bigger picture is, we know that crude oil has gone up, the price has gone up 50% since October, but this is a forecast for February. I don't see too much to shout about in terms of buying opportunities for this next month. I cannot see these virus and travel issues going away within 30 days. So this gives our overall bias for the next month for oil bearish, neutral to bearish. And unless we hear significant positive news in the next couple of weeks, this isn't going to change my mind. Okay, so let's have a look at the chart. And what I'm seeing right away is, funnily enough, on the daily, because I'll start on the daily, we are seeing a bullish sign. But this is expected. My bearish outcome is more short term. But we do have this bullish pennant forming. And we can see price really getting squeezed into around $55.50 per barrel. From here, so within the next couple of days or so, I will be expecting a break or a move to the downside. Now, we'll have to wait for the price action on that one. And in a time of real consolidation, we've been in consolidation really since the 10th of January for the last couple of weeks. We can do one of two things. We can sit out the market, or we can trade in between the range that we can see on a lower time frame. So I'll go on the 4-hour chart, and again, look, we've had this, the market's really choppy. We had this break of structure and we think, hello, we're in bullish conditions, but then we have a break of this low down here as well from the same move. So the markets really are quite choppy with oil at the moment. But what I could potentially see is a situation where we can trade within the range, if you wish to trade. So if we add our key support and resistance levels in, one up there, and we have another one here. Now we could have a situation where for the next few days, we're rebounding between these levels. So what I would suggest is to wait for price now to either reach this key resistance level. I'll call this resistance. It is rather like our order blocks. And we can use this level down here as our support levels. And really a case of just bouncing in between. So if price reaches up to here, we can potentially sell down and our targets be support. If we reach the support level, then we can target our resistance. Until we have a major breakout, we're not really in a trending market. Now, another tip that I would suggest while we're in this, if I just completely get rid of all of these drawings, what we could do is introduce some indicators. So let's have a look at the moving average. Let's have a look at the 20-day moving average. Now, what I'm seeing here straight away is I'm seeing, if I just point to that, we've had this cross here, which is a bearish sign, which ties in with the fundamentals we spoke about on the PowerPoint. This is the 4-hour chart. So I would be expecting, actually, when we marked out our range for price to move away from this moving average. We are starting to test it now, but to move away and move towards our support levels. And I'll add in another indicator as well, the relative strength index, just to see we are in a fair value situation at the moment on the relative strength index. So a move to the downside, there is room for it. And finally, I'll finish on the 1-hour chart. Now, on the 20-day moving average, we moved away, and now we're going into test. So we're at a really crucial level on the 1 hour. Until this candle closes above, then we could use this as our resistance level. Again, to target potentially this 1 hour order block here, which is just our support level. But it's also our take profit level. So what I'm looking for on this 1 hour is I'm looking for price not to close above this 20 EMA, but actually to close below. Close below, I will be aiming for this support level. Now, we know from the fundamentals that I mentioned, I'm not really looking for buy opportunities. So if the market does start to rally, then I will just sit out of the market until I see some short opportunities that gives me the best confluence. But other than that, guys, this market's really fundamentally, the most important thing about this market are the fundamentals at the moment. So keep listening out for news around the inventories, the COVID-19, the travel restrictions, and this will give you the best chance of success in this market, in this rather choppy market. But other than that, guys, that is all for today. Please like and subscribe to our videos. There'll be more monthly analysis videos coming out for February. Not quite sure what the next topic is yet. I'll see where I can find the best value. Drop any comments if you have any questions, or you can message me on my Instagram above me. But other than that, guys, have a great day, and I'll catch you all for the next video. Thank you.